3 years ago, I had exactly $100 sitting in my checking account doing absolutely nothing, just sitting there. And I kept telling myself the same story. I'll start investing when I have more money, when I'm making more, when things settle down. Sound familiar? Here's the thing. I finally got fed up and just did it. I invested that $100. No perfect plan, no big strategy. I was just tired of waiting. That 100, with nothing added, just compound growth over time, it turned into $312. Now, $312 isn't life-changing money, but it woke me up to something. And today, I'm going to show you the exact 5 moves I made, starting with just 100, so you can stop waiting and actually start building wealth. Look, I get it. $100 feels small. It doesn't feel like real investing money. But here's the thing. The financial system kind of benefits from you thinking that. Because as long as you're waiting, time is working for other people and not for you. The truth is, the best wealth builders I've seen didn't start with 10,000. They started small, stayed consistent, and let time do the heavy lifting. So let's break this down into 5 simple steps. These are the exact moves to go from zero to your first investment today. Step 1 is the most important one, and most people skip right past it. Before you invest a single dollar, you need the right type of account. For most people starting out, I'd recommend a Roth IRA. Here's why this matters. The money you put into a Roth IRA grows tax-free. Not tax-deferred, tax-free. Meaning when you pull it out in retirement, you don't pay a dime in taxes on the gains. Put in $100 a month for 30 years, it grows to $226,000. You keep all $226,000. No surprise tax bill. The 2026 contribution limit is $7,000 a year, or about $583 a month. You're not there yet? That is completely fine. Start with 100. You can open a Roth IRA at Fidelity or Vanguard. Both are free to open, no minimum to get started. Go to their website right now. It takes about 10 minutes to set up. Now, what do you actually buy with that $100? This is where most beginners get paralyzed. Thousands of stocks, ETFs, crypto, options, forget all of that for now. For a beginner with $100, there's one answer: a total market index fund or an S&P 500 index fund. Here's what that means in plain English. An index fund lets you own a tiny slice of the 500's biggest companies in America: Apple, Microsoft, Amazon, all of them, for the price of one share. Over the last 100 years, the S&P 500 has averaged about 10% a year. Does it go up every single year? No, but over time, it goes up. I personally use VOO. That's Vanguard's S&P 500 ETF. Or SKAX, Fidelity's Total Market Fund. No complicated research, no stock picking, no stress. Not theory. Stuff I actually do. Real quick, let me show you the numbers that completely changed how I think about money. $100 a month, 30 years, 10% average annual return. That's $226,000. You put in $36,000 of your own money. The rest, $190,000. That's compound interest doing the work for you. This is why starting at $100 matters more than never starting at all. Okay, let's keep going. Step 3 is where the real magic happens, and it takes about 3 minutes to set up. Automate your contributions. Set up an automatic transfer from your checking account to your Roth IRA, whatever amount you can do. $25, $50, $100. Pick a date, set it, and forget it. Here's why this is so powerful. It removes the decision from your hands. You don't have to remember to invest. You don't have to feel like it. It just happens. I set mine up the day after my paycheck hits. That money goes straight to my account before I can spend it on something I don't need. This one habit, automating, must have the single biggest difference between people who actually build wealth and people who keep saying they're going to start. Step 4 is what nobody talks about. Fees. Every investment fund charges what's called an expense ratio, a small percentage taken out of your returns every year. Sounds tiny. Over decades, it destroys your wealth. Some funds charge 1% or more. A 1% fee on $100,000 is $1,000 a year. Just gone. VOO charges 0.03%. That's 3 cents on every $100 invested. When you pick an index fund, always check the expense ratio. Look for anything under 0.2%. Fidelity and Vanguard have some of the lowest in the industry. That's why I recommend them. Last step. Sounds simple, hardest one to actually follow. Stay consistent, especially when the market drops, because it will drop. The S&P 500 dropped 34% in 2020. It recovered in 5 months and then hit all-time highs. When the market drops and you keep investing, you're actually buying more shares at a discount. It's called dollar cost averaging, and it's one of the most powerful moves in long-term investing. Don't check your account every day, don't panic sell, don't switch strategies every 6 months. Because a YouTube video scared you. The wealth builders are the boring investors. Set it, automate it, leave it alone. All right, and here's your 100 their investing checklist. Screenshot this. Open a Roth IRA at Fidelity or Vanguard. It's free. Buy an S&P 500 index fund like VOO or FSKX. Set up automatic monthly contributions. Even $25 counts. Check the expense ratio. Keep it under 0.2. Stay consistent, especially when the market dips. That's it, not theory, stuff that works. If this gave you a clear starting point, hit subscribe. I put out new practical money videos every week to help you get more out of every paycheck.